What's going on, everybody? How you guys doing? Welcome to another episode of Free Your Mind. Your host, the one and only Danny Ampon here. We have a special guest in the house, the one and only Wisdom. Wisdom, how you doing today?
I'm doing fine. I'm doing fine. How are you?
I'm doing very, very well. We wanted to get you on the show today, to let you talk to yourself about what you involved right now with financial literacy in the community, in the young people. So you want to introduce yourself, what you do, what you're about?
Yeah, as I said, my name is Wisdom Obianime, Nigerian, specifically Port Harcourt River State. I teach people about money, how money works here in Canada, how to properly save, invest, pay off debt faster, and everything in between.
You went to school as a computer science person. You did your degree and everything. So, Wisdom, what made you switch from computer science to become a financial literacy kind of person?
Yeah, I mean, it wasn't really more of a personal choice. It was, I would say, out of options. So when I finished computer science back in 2022, applying for jobs was a bit difficult. Well, I did, but none of them stuck. Went for interviews here and there. I even had the opportunity to work at the barber shop. I used that as a placeholder to keep myself busy. But still, nothing came, and I didn't want to just keep laying around,
That's true.
right? So I decided to. I was actually previously part of this company, like way back in 2021 when I was still in school.
Oh, okay.
But I didn't give it any importance because I was still in school. So fast forward to when I was looking for jobs in my field, and it wasn't sticking, so I just reverted back to my financial literacy business. I just decided to give it a try. And yeah, here we are now. I find myself talking about money as opposed to writing HTML and CSS code.
Okay, so for yourself, are you able to explain a little bit about financial literacy for people that don't really understand? Like, what are the steps?
Yeah, 100%. Well, even before I go into that, a little bit about even the reason why this is something that I'm pretty passionate about is because now that I'm in the field, looking back, I remember when I came in 2018. I came in 2017. In 2018, I got pre-approved the credit card. So if you can guess how much the limit was, can you guess?
$500 or 5,000?
Exactly. So usually students or immigrants, they give you like 500, 1,000. They gave me 7,500.
Whew.
Yeah, I still have it. Right now, I have it. It's still here. It's fine now. But at the time, well, I didn't know whether that was big or small.
You told you were rich.
Yeah. But luckily, I knew how to use a credit card. But I was like, wow. So if they can give me a $7,500 limit at that point when I was new in Canada, imagine all the other people or the other immigrants or less people that don't really know how to handle money. Imagine how they would have used that sort of limits and been in a lot of debt. So looking back at it, you can see that there's kind of a gap.
Yeah.
So fast forward to now, if I was to kind of advise someone on how to handle it, it's more about looking at it from a holistic point of view. Because a lot of times when we want to talk about money, the first thing we go to is investments. Or what's the latest crypto or Bitcoin? Where can I put my money here to get 10 times the return the next day? But you keep forgetting that there are other aspects of finances we need to talk about, like protection, debt management, building emergency savings. Right? I think there's a statistic that said in the US, I think like 50% of the US citizens can't cover a $1,000 emergency, meaning that they pretty much don't have at least $1,000 in their accounts to cover a $1,000 emergency. So that's a very, very big problem because now people going use their credit card to cover emergencies that they didn't plan for. So this is like you going into debt to cover up more debt, right?
More debt, yeah.
Yeah.
So people that come new in Canada, what are like suggestions do you have for them when they give them the credit card or how to maintain their bills, how to be able to pay on time, how to be able to get ahead in life? What?
Yeah, at the end of the day, is understanding or knowing how much is coming in and how much is going out. Well, because for me, even when I came in as a new person, I wasn't making money. But then I got an insurance policy. Where did I get the money from? Well, typically when people come here, their parents are still supporting them, right?
Some of them.
Some of them, right? Well, yeah, some of them they are still supporting them. So if you can, because coming here, if your bills are pretty low, you can easily start making savings here and there, even if it's $50 or $100. So I would say at the end of the day, just knowing how much is coming in and how much is going out, and working your way up from there.
Because I know most young guys, when they get here, they don't really know the system. They don't know how to build a credit. They don't even know how to save. All they do is, you get money, it's gone. And some people that are on student loan, they don't even know they get the money, boom, it's gone. Some people get the money, they partying. They're doing this, they're buying this, they're buying that.
Exactly. So I would say it's even in human psychology, it's we tend to like to do the things that give us instant gratification. So it's more appealing to post on Instagram that I got the new Jordans than to say, oh, I just started saving $50 in my TFSA, because it's boring, right?
Yeah.
Nobody. It's like if I come to you to talk about TFSAs and you're like, ah. But
Forget
then
about
if I
it.
say let's go to boat party
You're there.
and spend money on alcohol, it's more flashy, right? On the on social media and like to friends, right?
Yeah.
Exactly.
So how do you teach people? What are the steps to start letting people know ahead of time? What do you need to do? How to save money? Let's say you come here, you have a plan. So, okay, after school, I want to go through this. I want to do this. I want to do this. I want to buy a car. I want to save. I want to be able to buy a house, which they don't really teach you.
Yeah.
So how do you go about then letting people plan ahead of time?
So what our campaign does, me and my team, or what we do as a company, is to first of all educate the masses on various topics, like from things as little as building savings and wealth to up till preserving your wealth and estate. Now, after we've taught, hosted workshops, things like that, if anyone wants to get more information, right, we now sit down with them one on one, because everybody's situation is different, right? My situation can be different from yours. So we see them one on one, and then we do something called a personal financial strategy. It's just a fancy word of just saying, okay, tell me how much is coming in, how much is going out, what are your short term goals, medium term goals, and long term goals. It's just like going to the doctor. When you go to the doctor, they have to diagnose you first before they prescribe you. So same thing here. They have to tell us what they want, or what they want to achieve at least, and then we provide a solution. Now, if that solution is okay with them, or if it's their budget, we can move forward. If it's not, at least now they have a mental map, or at least they know what to do in the near future, right? Worst case scenario, they leave the appointments now more financially educated. They can make financial decisions from an educated point of view rather than from an illiterate point of view too.
So what would you recommend? Would you recommend that people use their credit card all the time and pay it off? Or do you recommend they use certain amount of money on the credit cards? Because I know once they give you a credit card and you spend less than 25% on it, it doesn't kill your credit.
Yeah.
Or you prefer they use their savings account? Or
Well,
which one?
Well, it depends. Well, we're in North America. It's all built on credit system. You need a good credit to get a bigger loan for a house or a car and things like that. So I wouldn't say getting a credit card is bad or good. It's just depending on how you use it. So, for example, if I get a credit card, well, you always want to pay it off every month. And like you said, if you use less than 25%, it doesn't really hurt your credit. But then if you use way over, which people tend to do, it now gets out of hand. So well, it depends. It depends. I would say it all depends, because, for example, if you're flying, I always use my credit card to fly to get the points and all that stuff too. But then if it's for, I would use my credit card to put the down payment on the car, right? So I'll most likely use my savings, like that I actually saved to do that. So it all depends on what you're using it for.
What would you recommend with people that use like line of credit? They get a line of credit, use it for down payment on the car, or down payment on the place. What would you recommend?
Yeah, I mean, okay. So now we're talking about assets and liabilities, right?
Yeah.
So you getting a line of credit and now putting it on a car is like liability upon liability. So I'll probably not advise that. However, if I want to take a line of credit to maybe start a business, so that's a whole different case now because now, yes, I'm going into debt now, but I'm investing it into an asset that will pay me back way more than what maybe a normal job would do, right? So if it's getting it out, especially using the line of credit or credit card for consumer consumptions like maybe travel or buying a car, or all those depreciating assets or liabilities, then it's a no-go, right? Because the interest on your credit card line of credit is always very high,
Like
and
20% or something.
yeah, most times there's no investment that will do more than what the interest rates you get on your credit card too, right? So it's about how you use it, in my opinion.
So, so how about like people that have like children that don't know how to save for their kids' school? Wait till the kids get old before they start planning, or how? What do you recommend? Like what age? Because there's what RESP, there's RSP, there's mutual funds and stuff like that. So what do you recommend for people?
Yeah, so this is where the education comes in place, right? So we teach people about all the different accounts. So in this case, well, there's literally an account specifically for kids education, which is the RESP, right? You put in X amount of money and the government matches you. So that's a very, very good way to save. However, what a lot of people don't know is that the account is just an account, like a basket. You have to now choose an investment inside for it to grow. So what most people do, unknowingly, to be fair, so this is where the campaign comes in. Unknowingly, they open an RSP and the money they put it in is in a savings account within the RSP. So now you're manually saving for the kids' education instead of investing it, for example. And I saw this with even one of my colleagues. She came here over 12 years ago. She's putting the money in. She sees that it's not growing. It's literally
Sitting there.
sitting there, right? This is not until she joined the campaign and found out, wow, you can actually, so many people don't know that you can actually invest within those accounts, right? Just because it's called RESP, Registered Education Savings Plan, just because it's called savings, it does not mean you have to save the money. You can always invest it. So a very, very easy way to save for your kids' education is to use the RESP. But there are other ways where you can also save for your kids' life, much more than the education too, right? Like down payment for your first house, to buy a business, or to buy a house too, and things like that. Yeah.
No, but it's because usually people that don't know about this, like RESP and RSPs like that, they think they're doing something great. And when you go to the bank to sign up for it, most of the people that don't really know that you can invest RSP or invest in your tax tree saving and stuff. What do you recommend for them? Like, what do you tell them? Is it to go high? Because remember, there's high, there's low, there's medium.
Yeah.
Because everybody's tolerance is different.
Yeah, you just answered the question. So when it comes to investment, it's all about your risk tolerance. Actually, more importantly, when you need the money. So for example, if I'm saving for my kids' education, let's say my kid is 2 years old, I know that they're going to go to college at 18, so I have 16 years.
To save.
So I wouldn't save it in a savings account. I would invest it because I have time. So I can afford to put it in a more aggressive investment. For example, now if my kid is 15 and is going to school in the next 2 3 years, then I would not invest it because the time is short, right? So it all comes down to number one, how much time do you have, and what is the goal for the savings or the investments?
Yeah, but at the same time, 15, having a 2-year-old and having 15-year-olds, like, is such a big gap. If you have, let's say, if you have a 15-year-old that's in grade 10, grade 9, and that's about to go to college about maybe 18 years, is it still doable to be able to invest that RESP, or you don't recommend that?
No, not really, because, well, first of all, the RSP is up until 18. You can't
Okay.
open an RSP after 18, so you might as well manually, just
Let the
save
money
the
sit.
money. Yeah, yeah, yeah. So most likely, not mostly, you definitely have to take out a student loan, right, for him to go to college, like a proper college, unless maybe the parents are making a lot of money that they can actually save for their college education. So this is why the time is very, very important, and that's why we always try and educate parents with kids as they are less than 5 years old to start saving now, right? So that when the time comes and they need the money, it will be substantial for their education. I also thought about it the other day. I was thinking, even my dad knew this because for him to send me all the way here to Canada, that means he did something. He definitely did something while I was pretty young, right? I remember when I even went back to Nigeria in 2023. He told me he bought one land in 2001. In 2001, I was 1 year old, right? So even then, even he knew that he needs to start doing something for their kids as early as possible. It doesn't have to be much and not wait till they are grown, right? So it's the same concept, right? You always want to start as early as possible because what I find is that a lot of people are scared because when they hear investments, they think of, oh, I need to put in a lot of money. But then that defeats the hope. That's not the point. The point is the principle. The principle which is starting as early as possible, so that even if you might not be making money now, in the little you can save, when you now make significant amount of money, you can now save more. What people think is that, oh, they want to wait. So let's say I can only save $50. So instead of saving it, I would say I want to wait till I'm making maybe 60,000, 100,000. But the thing is that when you wait too long, number one, you're losing time. Number two, there's something called lifestyle inflation. If you can't save $50 now, when you're making $100,000, you won't be able to save it because you'll be spending more money because the habit is not there, right? So it all comes down to the core principles of starting as early as possible with the little you can and building up from there.
Oh wow. See, I wouldn't even know that, and I think I'm really good with money. So now let's switch from RSP to like life insurance. Most of us don't know about life insurance. Most of us think when you get life insurance it means you're about to die. So are you able to like get in a little bit of details why our people should have life insurance, why they should get it, and what is the need for it?
Yeah, definitely. Well, there are so many ways I can come at this. So we're in North America, right?
Yeah.
Typically, maybe back home, when somebody passes away, not really a big deal. They have their family members and maybe the grandparents. Everybody can take care of the surviving people. But that's not the case here in Canada. People come here, they work 2, 3 jobs to make ends meet. I meet people, they are big, they have houses, real estate in Nigeria. They come here, they can barely get a job, or they're working in construction. So this is what happens. You come here, you get 2 jobs, make ends meet. Now you're working 2 jobs, maybe 16 hours, 12 hours per day. You're sleeping 4, 5 hours. Before you know it, it's compounding, you get stressed. One of the leading causes of cancer is stress and death too. So you get stressed, you get sick, pass away. Now, all the money you've been working for and saving is insignificant.
Yeah.
Right? So that's where life insurance can bridge that gap between responsibilities and income, right? Because we tend to insure every other thing but ourselves. You get a phone plan, you get warranty on your phone. You getting a phone case is a form of insurance because the idea is that if your phone falls down, the phone case protects it, right? Obviously, you're not going to get a phone case and say that, oh, now my phone is going to fall, right? You never know. You get car insurance. As a matter of fact, it's still mandatory to get the car insurance. When you buy a home, you have to have mortgage insurance too. And even your flight tickets, you get travel insurance, right?
And don't forget, you gotta get actual insurance for fire and theft and all that.
Exactly. So why is it all of a sudden when we say, okay, get insurance on your life, which is the most important thing, all of a sudden it's taboo, right? It's almost like it's a religion.
People don't know.
Yes, and sometimes they don't believe. This is not religion, right? The same way there's a TFSA, it's the same way, it's just a tool, it's a risk management tool. So especially in our community as black people, we see that a lot of our people are passing away with no coverage. And now what do? GoFundMe. Since I've been in this industry till now, I've never seen a white person do GoFundMe before.
When they die.
Personally, when they die. That should tell you something.
That means we would rather go spend money on bottles than insure ourselves.
Yeah,
or spend money on like $600 Jordan shoes than insure ourselves.
But you're right. You're right. It's the lack of information because I meet people and they say it's only for the rich. But that's a clear lack of information because there is a coverage and an amount for every budget, right?
Yeah.
Whether you're putting in $9 to 50 to 1,000, there's a budget for everybody.
So let's say okay, let's use me for example. Let's say I want to have life insurance. Let's say $250,000. So maybe God forbid, something happen, my kids will be okay. So $250,000, $500,000, $750,000, $1,000,000. What would be monthly payment be? Let's say you wanted to get a life insurance like $250,000.
Well, it depends on the type. So if it's 250, for the something-year-old, and it's a term insurance, temporary insurance,
Yeah.
I would say maybe 25. But then if it's permanent, which has investments in it, we put in at least 200 for 250, and then 500 would be, and it just keeps going as high as that. If you're putting in 1 million, if it's a $1 million coverage permanent for the 7-year-old male, 1 million, probably close to 1,000. Put it close to $1,000 per month, yeah. Close to 1,000, yeah.
So are you able to explain the term and
Yes.
the terminology so that people that don't understand will be able to know?
Yeah, so generally there are two types of life insurance, or two categories, term and permanent. So for term or temporary, as the name says, it's temporary. So you only get covered for a particular time that you choose. So for example, if I choose a 10-year term insurance, it means I'm covered for only 10 years. If anything happens to me within that time, the money gets paid to my family. If nothing happens to me, then all the money I put in is gone.
Really?
I have to
after the 10 years.
Yeah, I have to. It's just like any other type of insurance. I have to renew it. Now, the only problem is that when you renew your term policy, you're gonna pay way more because now you're 10 years older.
Yeah.
So age, and your health status, your lifestyle is a big factor. Especially age. The older you get, the more expensive it becomes. Now, permanent is where things become interesting. Because now, permanent, you get the chance to also have investments within the life insurance. Now, that's a game changer because a lot of times people are like, okay, this money, I'm never going to see it. It's only for my kids. But permanent insurance solves that because now you have the ability to invest, which you can use while you're alive, and you also have the insurance for when you're passed away. So you're kind of doing two things at the same time. Because it has two components, it's generally more expensive than
like the temp one.
the term insurance. But it's good because now you have coverage for life. You don't need to renew it. From the day you get it to pretty much the day you pass away, you have coverage for life too.
Oh wow! So and that one does the premium goes up as you get older, or the premium stays the same?
Good question. So when you get a permanent insurance, the monthly premium, it goes up every year. However, it's covered by the investment portion. So
So you don't see.
yeah, you don't see. So for example, if I'm putting in $300 in my permanent life insurance, I'm already overfunding the policy. So the cost of insurance goes up, but because I'm also investing my money, the investment is growing way faster than the cost of insurance, right? So it's automatically like covers the cost of insurance. So even though the cost of insurance goes up, my investment is growing way faster that it covers the cost of insurance. So that's why for a permanent policy, people pay for it for only 10, 20, 30 years, and they don't pay anymore, and their policy just keeps running.
So let's say you're 20 years old, you want to do this permanent life insurance. Are you able to do it that way you can save some for, let's say, when you're 10, like let's say you make like a 10 years, I want to buy a house, I won't be able to use them, or 20 years down the street, you want to do a vacation home or something. Are you able to do that or not really?
100%. 100%. 20 years old, saving for 10, 15 years, you can definitely do that. The thing is that with the investment part of it, you can take out the money to pretty much do anything you want. And one thing I want to say too is that the investments or a permanent life insurance policy is a tax advantaged account, meaning that your investments grow tax-free, you take it out tax-free too.
Oh wow, so you don't pay taxes on it?
You don't pay taxes. This is actually very important because a lot of times people max out their TFSAs. Now, the thing is that when you max out your TFSA and you have some more money to invest, you're looking for another tax-efficient account to invest your money. You can't put it in RSP because it's a tax-deferred. definitely you can't put it in savings because savings you get tax, you get capital gains tax. The only other tax efficient account that you can use and invest tax free and take it out tax free is now the permanent life insurance too.
Okay.
So when you max out your TFSA, you can transfer some of that. You can any extra money you have to invest, you can put it through a life insurance policy.
Oh wow.
Yeah, they call the permanent life insurance policy like a rich man TFSA.
So if you don't know, you don't know.
Yeah.
Oh wow. See me, most of the stuff that you said, I didn't even know. I thought I know so much about it. I thought I was doing so well, but I guess you know what? Sometimes it's good to talk to people. That's why today we have the financial aspect here. But you yourself, what do you do for yourself? Are you one of those people that invest in all this permanent life? Or because most of the time, if you want to do it for somebody, they want to make sure that you two you're doing it. So that way, they want to make sure the money is going to the right place. You know, not like somebody they invest in them 5 years from now, they try to find their money, they can't find the money.
Yeah, I mean, I have everything to be honest, and I'm even going to get more. So I got my first policy at when I was 21. It was a permanent life insurance. I was putting in $40. That's how affordable it was. Well, I quickly increased the premium, and then 3 years later, I got critical illness insurance too. That's another sort of insurance that's it's very very important to have, especially in Canada because 50% of men are at risk of developing cancer and 30% of women are at risk of developing cancer too. So critical illness is very important. I also have a TFSA. I even have GICs with the banks. I have stocks. I have segregated funds too. So I even have a term insurance too. So I have term, I have permanent, I have everything.
So with all this stuff, how are you every month for somebody like somebody that make let's say a little bit of money with rent, with car payments, with food, with electrical bill, with phone bill? How are people gonna be able to like manage to be able to save this? So it's good to let people know. So when I tell them please call Wisdom, they will know. Hey, okay, at least Wisdom be able to help me facilitate everything I've tried to do.
Yeah, I would say it's a step-by-step process. I didn't get all of this all at once.
Okay.
I started, like I said, with just $40 life insurance policy and $50 TFSA. So that was like $90.
Per month.
I'm pretty sure people can. $90 is not a lot of money to just set aside for your long-term future
Which is true.
or your long-term goals, and just slowly increase and just keep going from there. Like I said, all this is based on needs analysis, right? So what we do is always do a financial needs analysis to see, okay, what is coming in, what is going out. Because a lot of times when we actually break it down, the Netflix, the Amazon Primes that you've not watched, the gym you've not gone in 3 months, you can redirect all that to your savings too and top it up, right?
Yeah.
So it's very, very important. That's what we usually do, and then we can now see the gaps.
It's true because if you watch lately, you have Amazon account you pay like say what $20 a month, Netflix $20 a month, you have Spotify which is another $20 a month, you have Apple Music another $20 a month, and if let's say you go out to go eat, that's probably another $100 a month. But the way they take the money, you don't see.
Yeah.
So if you have to go through all the cancel some of this to be able to do financial, it makes sense.
Yeah.
It really makes good sense.
Yeah, I would also say, to be honest, cutting costs is something you can instantly do and see instant results. But to be honest, the only solution is to make more money. Because sometimes I've met people the only thing they pay for is necessities like food, water, and stuff. There's only so much you can cut down. So something that I always encourage people is to find ways to make more money. Whether it's getting a second job, starting an online business, having a gig, or joining a group, right?
Yeah.
So one way or the other to earn more money and then redirect any money you get from there into the savings. So I think in the long term, that will work better than the short term, which is cutting costs, because the thing is, as time moves on, we tend to get a lot of responsibilities, like kids, house, family members. So in the long term, we are better off earning a skill, maybe even going back to school to learn a different trade that will put you in a better position to get a better job that makes you more money. So the mindset should always be looking for ways to make more money.
So, what are what are some ways would you recommend to some like there's some of the younger people that don't know about? Because I know having two jobs is good, but sometimes having two jobs working from here to here it gets tiring too a little bit, right?
Yeah.
So you recommend like what online, hybrid, or remote jobs?
I would say it's going with the times and looking for high demand skills like sales, coding, marketing, um, digital, um, even going into even real estate or something like that, right? So it's all about looking for high demand skills. The reason why I say skills because the greatest investment will always be in yourself. So the more time we spend in investing in ourselves, the more the better it puts us in a better position to earn more money. Because yes, you said getting a second job, you pay more taxes, less time to sleep, less time to stay with the family, might not be the area to go. And also working a job per hour too is limited because your income is capped at
Yeah.
24 hours, right? But then if you invest in a skill and now they are paying you based on the value you provide. So now you've taken out the amount of money you make by the amount of time you put, right? Now you're making money based on the value you provide. So if I'm painting this place and I paint it in 2 hours instead of 8 hours, right? The person that paints it in 2 hours is meant to get way more money. But then if you're working in a job and they're paying you $20 to paint per hour to paint, if I paint for 2 hours, then they're only going to pay me $40. That does not make sense, right? Because
Yeah.
I'm doing it faster,
Yeah.
so I need to get paid more, right? So in a nutshell, I would say, yeah, I mean, we're in a digital era, so going online is always the best. One easy way is to have a coding course, learning how to selling cars, selling tech, selling financial products. I know sales skills can be in any industry too, right? So to conclude, it's just investing in yourself, investing in high demand skills, so you can make more money too.
Okay, so Wisdom, are you able to let people know? You have to let people know how to get hold of you. So anytime that anybody that watches this that want to get into finance, help with their financing, with their budgeting, with your whole life insurance, please let them know your email, your phone number, your Instagram, your Facebook, your LinkedIn.
Yeah. So my email is wisdom, so wisdom WSB at gmail.com, and my phone number is 236-862-6084. So that's the best way to reach me.
Can they get hold of you on any of the social media outlets like LinkedIn? Are you on LinkedIn?
Yes, I'm a link. They can also I can put the link in below for my LinkedIn profile and also my Facebook too.
Okay. And you know what, Wisdom, we really appreciate taking your time with your busy schedule to come and help us. At least give people advice to the people that are watching at home, so that way anybody that want to get ahead in life or try to save money and get a life insurance, they can come to you. So please, anybody that watches, please, Wisdom is right here. Get in touch with him. Any way possible, we'll be able to help you. If you have some kids, you have some wives, have anything, trying to, dodge alimony or anything like that, he's your guy. So thank you so much, Wisdom. And I know we are out. Free your mind. Check us out on all the
so much,
social
Dan.
media everywhere. We're there. We're on Spotify, Apple, YouTube, anywhere. Thank you very much, Wisdom. We appreciate it, sir.
Thank you so much, Dan. I'll see you later.